Alright guys, it's getting crazier, and let's talk about the financial war. Now, Trump's economy today is essentially trapped in a vicious cycle of debt and deficits. He's juggling too many things all at once. On one hand, he wants to contain the economies of BRICS, not just China, but to bring India and Russia to heel as well. And this is going to cost a lot of money when you need to project military might as well. On the other hand, Trump wants to wage an endless trade war, and the plan is to move industries back to the US, and we know that plan is starting to fail, but the administration is trying to deny the deadly effects of the tariff war. And apparently Lutnick doesn't even understand how prices work. He definitely doesn't understand inflation.
Tariffs are not inflation. It is outrageous that people think tariffs are inflation. Remember, what inflation means is I'm going to go buy this tie, and I know the tie is going to cost $30. But next year, I think the tie is going to cost $33, and the year after, it's going to cost $36. So I have in my head 10% inflation, right? If this tie is made in Italy, and it's going to cost $31.50 now, so what? It's not going to change next year, the year after. And if I want to buy an American tie, I can buy an American tie.
Now, I'll be frank here, my IQ is not that high. I don't understand, I don't know what Lutnick is saying. Nothing in that speech made any sense at all. But what we do know are US families and consumers paying the cost. Now, Trump and friends have told us for many months that the grand plan, the end goal, is to impose tariffs to collect revenue, and this revenue will be used to pay down the national debt or at least reduce the deficits. Well, in August, tariff revenue hit an incredible $31 billion, and Besson is right in this case. This is a record collection. But as we indicated before, it's Americans paying the bulk of the tariffs. The money is coming from US importers, companies, and consumers. And Goldman puts it at around 80% of the burden. It's not China, it's not BRICS who's really paying. It's the average shopper at Walmart getting clobbered. However, is Besson real about fixing the US economy? Because as high as the tariff revenue goes, even if Santa Claus pays for it, there's still a problem. The US government keeps spending more. It's incredibly confounding. The budget deficit for August came in at $345 billion, 345, and that's 15% wider than the same month last year. So the government is spending more despite taking in record tariff revenues. But here's how much deficit has accumulated so far in 2025. In this fiscal year, so far, we have reached nearly $2 trillion. And the only time it was worse was during 2020 and 2021, directly after the pandemic bailouts. So ladies and gentlemen, if you ever wondered why asset prices are rising, this is a very, very big reason. Money is flowing from Main Street to the government who is spending the cash like drunken sailors. Now yes, Trump wants interest rates to come down. He says it is to revive the US economy, but I bet the real reason is to prevent the national debt from imploding during his term. There's a lot of things that are unsustainable with this economy. But the worst is the amount of debt which is spiraling out of control. Every day rates stay high, we are inching closer and closer towards oblivion. The government is essentially trapped here. In August, the administration collected $344 billion in tax revenue, but $111 billion went to pay just the interest on the debt. That's almost a third. Imagine working 4 months in a year just to pay off the minimums on your credit card bill. And what happens when this number jumps to 40% or even 50%? And with this pressure mounting, we best believe the Federal Reserve, they are cornered, and the cuts are coming. The US Treasury is cornered as well. Now, Steven Miran, Trump's man, is one step closer towards the Federal Reserve Board, and he's the architect of the tariffs, and he loves a weaker dollar. And that means eventually we could drop to 1% interest rates or even 0% in a hurry. It's really insane, but Trump has effectively decided to sacrifice the dollar to keep his trade war going. He isn't going to U-turn the boat. USS tariffs is not going to turn around unless the Supreme Court wins the case, which, to be honest, and let's be serious, it's more or less a coin flip now.
We've done a great job. despite the fact that we should have lower interest rates. Now, we have two things. We've been successful because of the tariffs. It's given us a great power to negotiate with other countries that took advantage of us. Tremendous power. Also, it's brought in trillions of dollars into our country. We have a big case brought by foreign governments because the foreign governments have been ripping us off for years.
But because of the tariffs, the devaluation of the US dollar is probably going to continue. The fundamentals against the reserve currency are still horrible. Now, Trump wants to punish China and India, which is essentially BRICS, and that's going to fuel even more de-dollarization. Trade between the US and the bloc is going to collapse even further, and retribution will be taken on dollar demand. And whether it's the rupee, RMB, or ruble, bilateral currency trade is going to accelerate, and that hammers away on the needs for dollars. Speculators on Wall Street knows this. Hedge funds, asset managers, and some guys in a pub, they are still placing big bets against the dollar. 7.2 billion in shorts are weighing on the USD. And this move against the dollar could last for many more months or even years. This is a huge cycle that strangely hinges on one man. Now, if Trump reverses the trade war and stops messing around, the dollar would most definitely rebound. It will rally. But as it stands, I wouldn't hold my breath. The risk for further dollar devaluation is still there. Now, it's good for Wall Street, but horrible for Main Street. And for China, they can see the writing on the wall. Yes, there's a trade truce between them and the US economy, but at the same time, Trump is trying to rally a coalition against Chinese exports. The secondary sanctions on Russian oil is probably just a convenient excuse. The plan has always been to contain Chinese industries, however, it gets darker. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Trump slipped something during his proposal to the G7. And listen to this mess. The G7 should create a legal pathway to seize the frozen Russian assets. And this could even extend to using the principal amount of those assets to fund Ukraine's defense. Now, we aren't talking about the interest payments, but the entire $300 billion locked away in the West. Now, tell me, if you were China, would you be concerned? Especially when you still hold at least 750 billion in US treasuries. Now, if you throw in Hong Kong, the amount is around $1 trillion strong. You'll be terrified, and getting your dollar assets out of Dodge, out of US custody is your main objective. Now, throughout China, there is a pervasive sentiment that the doors are closing and it's time to run to the exits. Now, Russia losing $300 billion is bad enough. Imagine $1 trillion just evaporating into thin air. Researchers from the Bank of China has already raised their concerns. Beijing holding huge amounts of US debt is a problem. It is not sustainable because the end result is either guaranteed devaluation or possible confiscation. Now, the suggestion is clear. China has to reduce exposure and shift their money towards key resources, strategic materials, and of course, buy more gold. And this is what we must talk about today. Holding gold is no longer an if for China, it's becoming a must. And when you hold a bullion in your vault, there's virtually no way for the US to confiscate your wealth. With the dollar losing even more value every single year and yields about to plunge on the short end, Why even bother? It's a double whammy that you can't afford during a trade war. Now, in August, China bought 60,000 ounces of gold, and that brought their total holdings above a record 74 million. And they have been buying gold for over 10 months in a row. Chinese gold holdings have hit 7.6% of their total reserve assets. Whatever treasury bonds are being sold off, a generous amount is flowing into gold bullion. Now, of course, this is what we are being told, but China has so many avenues to acquire gold, from the Chinese military to their commercial banks, all the way to the BBOC. It's probably upwards of 20 or even 30% if you ask me. But now China is going to accelerate their de-dollarization. Some money flows back into industries, of course, and some cash flows into BRICS projects. However, when it comes to national reserves, China doesn't have many options that have 0% zero counterparty risk. They need to bring the gold physically back to Beijing. You definitely can't leave it in a Federal Reserve or the Bank of England. That much is quite clear. Now, China is planning to streamline their gold imports in a big way. In other words, they want to bring in more volumes of gold for both national and commercial reasons. And this would mean multi use permits, a faster approval system, and an increased number of ports that can accept gold shipments. And think about this, if you are China, you realize that the US also has an agenda with gold. Now, Trump dropped his tariffs on bullion for a reason, because it is real money. And behind the scenes, the US is also making deals and discussing trade deals with the gold industry. Now, Trump's tariffs are working to shift global gold flows as well. It's a side effect that China is paying close attention to. And according to Switzerland, their gold industry might be building a refinery in the US. And the plan is to fulfill US gold demand domestically to reduce the trade tariffs. It's not confirmed, but it does tell us that the US also wants a piece of the global gold market. If the dollar is going to keep falling, it makes sense that Washington wants to be in the center of the gold trade. And knowing this, China wants to get their hands on even more gold bullion as possible. And it doesn't matter if it's in the hands of the PBOC, the Chinese people, or even jewelry shops. The agenda is to move gold from the west to the east. Now, picture what happens when the dollar does finally crack. Which other asset can they run to? The entire financial world sitting on the powder keg will get launched all the way into outer space. The world is simply not prepared for such a disaster. And this report from Morgan Stanley is extremely telling. They believe the dollar could lose another 10% of its value by the end of 2026, which means if US assets increase by another 10% in price, the falling dollar still screws over foreign investors. Their returns are effectively zero. And that's why foreign money are hedging their exposure to US assets. And simply put, they are betting for the dollar to drop just in case the plunge gets even crazier in the days and the weeks to come. Now, the report gets even scarier. A decline in the dollar could drive even more crashes. And this is a deadly feedback loop because of how big global exposure is to US assets. And when the herd starts to shift, suddenly confidence in the reserve currency can evaporate in an instant. We could see weeks where the dollar could fall by 2% or even 3% easily. And take EU investors for example. They hold 8 trillion of US bonds and stocks, which are obviously denominated in dollars. However, over 50% of all holdings are not hedged, which means if the dollar continues to fall, EU investors are going to get burned badly. And what do you think happens after that? Now, part of the herd will start to hedge, and then the stampede will truly begin. So don't say we didn't warn you, guys. The dollar's next decline could come swiftly, and while that happens, China is sitting pretty. They are sitting back, they are laughing away in Beijing, buying more gold. And this is a major risk that is lurking beneath the surface. Yes, the lake today looks very placid on the surface, but the undercurrents are extremely nasty. But let me know what you think. Can the tariffs really cover US deficit spending? And what is China's true agenda with gold? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.